Good morning, good afternoon, good evening, ladies and gentlemen, wherever you're based in the world. We are the Pipoholics from London, England. My name is Levi and it's my pleasure to take you through this presentation today. We will be visiting a currency pair where we spotted a trading opportunity. Be sure to subscribe to our YouTube channel because we post these videos regular. Also, if you want to follow us on social media where we post the odd chart and update on any of the videos, the links will be found below this video. This piece of analysis is going to review the pound against the New Zealand dollar. In the week, what we've done is we put on a short position at a resistance point and we had to cover the short quite quickly because the market didn't really react and break down at resistance like we'd hoped. So we have got a risk off approach at the moment. We're quite neutral on this and I want to talk through some of the features if you are trading this that you need to be aware of. This is the weekly chart. And ever since we put in this double bottom, it has been bullish. So make no mistakes about this. This is a bullish market on the weekly. Overall, this market could go higher and we could get to around the 2 point. So 2.00. Around that sort of place is more resistance because if you look at the wider movements of this market, it's put in a low at the double bottom, a high, a higher low, a higher high, come down, back tested previous sort of resistance, and ever since it's gone high, it hasn't been a convincing high, which is why I think a lot of people are looking at this market to short sell it. Furthermore, if we go to the daily, you can see what looks like a shoulder, a head and a shoulder, but this is what made us realize that this could potentially be a good opportunity for short selling because it's at a resistance on the daily. You're in this down channel. When we look at down channels, we only really want to sell at resistance. It's at resistance. So that's why we sold in the week, had to get out quite quickly because the market, as I said, didn't really break down like we'd hoped. And I'm wondering if this is a shoulder, a head, a shoulder, or maybe it isn't. Maybe it just resembles that. And if we go on and break out of this channel, then it won't be a head and shoulders at all. So we need to be very careful, and this is why we're quite neutral because we are at a resistance. What we need to see, if I just zoom in ever so slightly on this particular part of the chart, you can see that there has been a gentle and sturdy uptrend. If we are to short this market, we want a daily close below this trend line. If the market does not close below it, then we do not sell. If the market is going to fail at resistance, it has to close down here for us to be interested in selling, because there's too many people that are seeing this bullish momentum and they're wanting to basically buy a breakout. If the breakout comes, you'll get a close above this resistance, and what we're looking for is a convincing close. So we don't want the market to come up here and then retrace all the way just above. We want a convincing close. If the market pops quite a lot, then we might well wait for a back test and buy the back test, and then you know the target, it's 2.00. So we need the market to basically tell us what to do here, because we can sit here and analyze bits that look bearish and bits that look bullish, but at the end of the day we need the market to either break up and show us that this wants to go higher, or break down and know that we're ready to short this market. There is quite a lot of data out and announcements out for the New Zealand dollar scattered throughout next week, so I imagine that there will be quite a lot of volatility in this market, but it will show its hand, and we're not going to trade this until it showed its hand.